Mate Comyn, always good to chat to you. I want to start and just ask you, is there a cost of living crisis in Australia right now, with the emphasis on that word crisis?
Well, what we hear consistently from customers, both directly and of course indirectly, is many households are really feeling under pressure. We don't necessarily see that as it shows up in our proportion of customers who aren't making their repayments. That's obviously a very, very small number.
I was going to make that observation because looking at your results, it appears to me as though most households are coping just fine. There is no crisis.
I think that's right, but it also understates what customers, families, households and businesses, what choices and sacrifices they're making to be able to make those repayments. And so I think it's all relative. I mean, we're very fortunate that unemployment is very low. And so we don't have many people out of work. And that is something that could have a very big difference to both banks as well as socially.
Because there's a difference between a crisis, that's when somebody doesn't have a job and cannot repay a home loan, as compared with having to cut back on a whole bunch of things and feeling uncomfortable. So but crisis seems to almost, in the vernacular of politicians and of tabloid newspapers, that seems to have become the catch cry.
I think hyperbole is rarely useful. And what we do hear, though, from customers, they're finding it hard, and it's getting harder, and they're feeling under pressure. And I'm sure many of those households would be looking forward to a rate cut at the right time. And of course, we have to be committed to reducing inflation. That's bad for everyone and would make things worse, certainly over the medium and long term. But I guess what we hear is that many households are feeling under more pressure than they have in the past. And we're still optimistic. We think this year will be a difficult year, but a year that we will get through. We're certainly in a position to be able to support our customers, and that's exactly what we're going to do.
You also note in the presentation that it's a disproportionate pain that the rise in interest rates and the rise in inflation has caused on Australian households.
That's exactly right. I mean, there is no sort of fair policy lever that's equally applied. Monetary policy plays an important role in trying to slow aggregate demand and help bring inflation under control. Unfortunately, that's disproportionately felt by those who have outstanding loans, borrowings, often against their home. And so when you have a rapid change in the interest rate over a relatively short period of time, we've been somewhat surprised to see the resilience overall, but there's no question that that has come with, I think, real sacrifices for many households. And of course, I think hopefully once inflation does get under control, we can return to a more normal sort of economic scenario and growth. And of course, that's our primary objective, is to do what we can to support Australia's economic growth.
You make much of your money lending money on mortgages to Australian families. A lot of those people recently, in the past couple of years, have really borrowed enormous amounts of money in historic terms. Nobody twisted their arm to do it, though, did they?
No, and of course what's difficult is just access to any asset class, in this case housing, and then being able to reasonably predict your circumstances and how that might change over time. And I think what served people well over many years has been able to save, purchase a home, pay off that home over a long period of time. And of course we all know that house prices have appreciated, and particularly in certain areas. And I think it's a big driver of both economic and financial well-being for individuals. And so I can understand why people want to have access to that. And it's always difficult when circumstances change. But we always see, and we know, what really makes a difference, a negative difference to customers, is if they lose their job or there's a sudden change in their family circumstances, often something to do with a health-related incident, which we're not seeing, but we are seeing a pretty unexpected for many people change in the interest rate environment versus what they were expecting.
OK, so then you come to the bank itself. The bank has still got very high returns on the shareholders' capital, very historically low rates of bad and doubtful debts, even though you've got provisions set aside. The bank arguably is in the best shape it has been ever. That's the shape it's in. And yet you've got households feeling all this pain. The bank is not necessarily a true reflection of maybe some of that pain that's out there in the community.
Yeah, I mean, a couple of things. We would say the Commonwealth Bank and Australia's bank, but as Australia's largest bank, we're bigger and safer and less profitable. And there's lots of different ways that we could support that. I mean, we have a lot of capital, which is basically set aside for unexpected losses.
Which is about $6 billion.
Above the regulatory minimum.
Yes.
Australia's banks are very well capitalised, which is good, I think, for the Australian economy. You want a banking system that's resilient and robust, especially in really challenging times. You don't want bank failures, as we've seen in other markets.
But just one thing, you don't see those challenging times coming. In fact, you see the soft landing coming. So there's the other big question. Times may be actually quite good. Australia might be the lucky country all over again, including, that means our banks as well.
Well, I certainly hope so. And our base case, as you said, is that we'll have a soft landing. Exactly when rates will start to reduce, exactly where the target inflation meets the band is, of course, unknown. But we all know we live in a volatile time, times of uncertainty. I mean, nobody obviously foresaw or predicted COVID, and I hope we don't see another global pandemic. We talked about some of the banking instability. That wasn't widely thought about, and that was just over 12 months ago. So things can change quickly, but yes, we're hoping it's fairly benign. And notwithstanding, it could be a challenging year. Long term, there's lots of reasons to be optimistic. And I guess as we look around the world, there's not many economies that we'd want to switch places with. And certainly, I believe Australia's banks are very strong. They're very balanced insofar as the savings that they pass on to customers. And so I think we have a very good economy on a relative basis here, and I think we have a very good banking system.
But you're not even immune from the cost of living either. Wages up 5% in the past year, IT costs up 8%. Now, this is inflation at its very core. At some point, the bank itself has to address its own costs to make certain that its returns are not diminished. You're being squeezed up on margins. There's, quite clearly there's competition in home loans, competition on the other side on deposits. So there's a range of different pressures even inside this bank.
Absolutely. And all of those things feed into, one way to think about it would be our expenses in totality were up 4%. Our income was flat, or 0% growth. So you'd say we absorbed the inflation. Now, banks work differently to other businesses, but that's ultimately what happened. And we had lower loan losses than we otherwise anticipated, mainly as a function of what we were talking about earlier, lower unemployment. So, of course, we have to be thinking about shareholder profitability, dividends in the period, in a 6-month and a 12-month period, but particularly importantly over the long term. But it has to always start with doing a great job, serving our customers, delivering a great experience, being there for them every day and being able to support them through the good times and the more challenging times.
I just want to ask you about the government and its IR changes, and in particular this notion of employees disengaging. There'd be many Commonwealth Bank customers who get called, or rather employees, who get called after hours because something is happening. If there's a crisis on, people are called after hours. What's your own sense about the reality, the flexibility, the reality of basically having people being able to disengage?
Yeah, from our perspective, we think it's obviously really important that we're thinking about and looking after our employee well-being. It obviously helps them thrive in their job and do a great job for customers. As you quite rightly said, Ross, I think the expectations about what sort of contact you might have with an employee after hours would vary greatly. I mean, 2 examples would be, if you're a customer service specialist in branch, I think the expectation's very different than if you're a cyber expert and there's some sort of incident, or if you're a senior executive. So, I think there needs to be a range of reasonableness. I don't think it's a one-size-fits-all, and I think it's something that could be well managed, provided there's that flexibility.
You mentioned cyber there. What's your budget for cyber right now as compared with what it was 5 years ago?
I'd have to think about the precise. We're $750 million we'd spend per annum. That's on cyber and financial crime and scams. It would be more than double where it was sort of 5 years ago.
That's because every business has just got to become paranoid about that, doesn't it?
Oh, it's extremely important.
Your whole reputation almost relies on you being safe and secure.
Yes, and it's a very difficult risk to manage for the largest and most sophisticated institutions, for governments, and also for our smaller businesses as well. Obviously, we have access to specialist skills. I think it's a really important national priority. I was at the Prime Minister's launch of their cyber strategy. I think that's it's a great initiative to actually strengthen Australia's defences and to make Australia less attractive as a source of cyber crime.
Matt Comyn, it's always good to catch up with you. Many thanks for your time today.
Pleasure. Thank you.